Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 3rd of June 2019, so welcome everyone. Welcome to this Monday's morning session where we're going to have a look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest, and we can continue. Okay, so now then, let's quickly jump into the charts. Now, the first one I want to touch on here is the Nikkei225. Now, Nikkei closed already, so near this key area of support that I talked about yet last week when I was covering Nikkei. Basically, what I was saying that we need to see it drop below the 20,765 level before we could consider further declines. And the next target for us could be this one right here, where Nikkei kind of found good support today. So of course, for now, what we could see here is we may see maybe a small correction, small correction back to the upside, maybe pushing back not much, maybe even actually, like I said, testing the 20,765 level from underneath. This is where also we do have this downside resistance line, short-term downside resistance line taken from the high of the 25th of April. In a way, we could see a test of that one as well. So if both of these levels, if the 20,765 holds, and if the downside resistance line also kind of helps to resist the bullish action, then we may see another leg of selling, which could lead something maybe to a break of this key area of support near the 20,345, and then maybe test the area near the 20,100 level, so approximately right there. Now again, let's not forget about the option if we see we don't see this push higher straight away, we see a further decline towards the 20,100 level, and then maybe a rebound from there and going back up here. So in a way, like I said, there could be a continuation slide here, but for now, be very careful. Let's see. What you could do here is, from the very short-term perspective, if you start seeing a push above this little area right here, which is the high of today, which is around the 20,435 zone, then we may consider this option here, where we could see maybe a small correction to the upside, and then yep, another leg of selling. If this doesn't break above the 20,435, and you see this one reversing and dropping below the 20,345 level again, then, well, I mean, we could see that we could see that move to the downside, and then we'll take it from there. Maybe the index would decide to rebound from around the 20,100 level and then push towards this downside resistance line. But again, this is for now. This is very tricky, but very interesting at the same time. So yep, let's see how this is going to play out, and yep, keep your eyes on some of these key levels that I talked about. In terms of the upside here, from the near-term perspective, let's say to shift our views towards the upside in the near term, we would like to see a push above this downside resistance line first, and then we'll consider some possible higher levels here, especially like the 21,400, which in a way could coincide here with the 200 EMA on the 4-hour chart. So good potential target, but again, we need to see a nice good clear break, and ideally a close above this downside resistance line first. Jumping into a few commodities now, I talked about gold last week, and basically now it's turned for silver. Now, looking at this, of course, as you can see, the commodity was trading below its downside resistance line taken from the 21st of March here, but on Friday, sorry, on well, actually 10 this morning, during the Asian morning here. I mean, it managed to already break it again to the upside. It did manage to break it on Friday as well, and it did that, but it never kind of closed above this. So this morning we're seeing now the 4-hour candle closing above this downside resistance line. This of course creates this nice opportunity for the bulls to step in again, but we're going to wait for a clear break above the 14.65 level, and ideally a nice good 4-hour candle close above the 14.65 zone before we could examine slightly higher levels. Initially we will target the 200 EMA here, and then we will aim for the 14.83 zone or even above that. But again, let's not overcomplicate and over speculate this one. First, let's see if it actually can manage to push above the 14.65 level again and stay there, and then yep, we'll target higher areas. In terms of the downside, if this suddenly drops back below this downside resistance line, what we're going to do here is we're going to wait for a clear drop below the 14.48 zone approximately here. Then we will aim for this low here, the May low, near the 14.27 zone, 28, something like that, and then we'll take it from there, see if it actually wants to break below the 14.28. If it doesn't, then it could be a nice bouncing ground, but if it breaks below this, then this would confirm a forthcoming lower low, and we could target even lower areas. For now, guys, keep your eyes on this downside resistance line, and of course this key area, this barrier that I talked about at 14.65. We need to see a nice good close, at least of a 4-hour candle above this, before we could consider higher areas. Jumping into Ripple very quickly, I've talked about this one last week, and especially on Friday, we saw this one sliding on a Thursday already, and on Friday the crypto kind of stayed above this area. It even stayed above, not only above this short-term upside support line, but also above this 0.4185 zone, which is quite interesting. And as you can see, this played as a this level here played a very good role of support. Previously, as you can see, it acted as a good area of resistance back on the 19th of May. So in a way, we had a nice bouncing ground here, and it pushed higher. For now, what you could see here is, and you already probably noticed, that we do have something of an ascending triangle here. So in a way, even if we see a slide back down here a little bit, then as long as this upside support line remains intact, we will continue targeting higher. But for those, let's say, who are more on the cautious side, or doesn't like to take that much risk, in a way, you could wait for a break here above the 0.4790. This way, if we do get a nice break and a close of the 4-hour candle above this, then this would confirm a forthcoming higher high, and we could even target the psychological 0.50 level then. But for now, it's sitting here. Let's see how this is going to perform. It might actually trade here in this little area for a while, so that's why I've got an arrow here where I'm still also considering a possibility for maybe a small slide to the downside, maybe testing the 0.4367, or even, like I said, the last resort here could be this upside support line. Now, in order to consider lower areas, ideally we would like to see, now we need to kind of lift this arrow a little bit here. Ideally we would like to see a nice good break, of course, of this upside support line, and ideally a nice good close of at least of a 4-hour candle below this 0.4185 level, which proved to be quite a good area of support. Now, and if we do see something like that, then yep, we will aim for slightly lower areas, maybe just slightly below the psychological 0.40 level, around the 0.3762, 63, something like that. That's what going to be our target. But for now, it seems to be willing to travel a little bit higher, yep, but be very careful here in this little territory. And like I said, for those who are more on the cautious side, you could in a way wait until we see a nice good clear break and a close above the 0.4790 zone. So keep your eyes on this one. Jumping into a few pairs now very quickly, and that's AUDUSD. I talked about this one last week and told you told you to keep a close eye on this little range here roughly between the 0.6905 and the 0.693738 zone. So the pair managed to break it to the upside, so that's a good sign here for the bulls. In a way, we could see this one traveling a little bit higher. Initially, we will target this area right here near the 0.6970, which could be around the 200 EMA by the time it, or should I say the 200 EMA could be around this area by the time, let's say, this travels a little bit higher. So in a way, for now, this is looking somewhat more bullish than bearish, but again, we will be very careful on this one because this pair, or should I say the Aussie, is kind of vulnerable to any kind of bad news coming out from the US-China trade talks. So that's why it might take a strong hit in case in the situation if let's say something worse is going to come out from those negotiations. So that's why for now be very careful. That's why we're not saying that this is going to travel much higher. Now for now we're going to be very careful with this one. Yes, we are going to aim for a little bit higher for some higher levels, but yep, for now looking at this picture, the technical picture seems to be somewhat more positive than negative. In case the reverses back down, drops below the 0.693738 zone, this is going to be our little neutral territory again, because for us to consider the downside, we would like to see a drop below the 0.6905, and then we will target these May lows near the 0.6862. A break of those May lows then would confirm a forthcoming lower low, and we could slide even further down. But for now, it seems that the downside could be slightly off the table, but again, be very careful with the news as well. Euro dollar. Now, this one is a bit of a tricky one. So of course, last week on Friday, the pair managed to recover a lot and managed to push higher and managed to remain above this 1.1175 zone. So this is a good sign here for the bulls, could be seen as a good sign. Today you can see that the pair is already trading above its pivot, which is also could be taken as a positive. Still, the upside could be limited due to this downside resistance line taken from the high of January this year. So in a way, be very careful if this downside resistance line breaks, and if we see a nice good push above the 1.1215 zone, this barrier right here, marked by the high of the 27th of May, then yep, we'll we will aim for a little bit higher levels here, and potentially aiming for this 1.1260, which also acted as a very strong area of resistance back here in the end of April, also in the beginning of May, and around mid-May. So good potential target, but again, like I said, in order for us to consider those slightly higher levels, we need to see a nice good push above the 1.1215 level first. In terms of the downside, if this, let's say, decides to slide further down, now looking at this from today's perspective, in a way, the last resort here for the bulls to step in could be around this pivot, which is around the 1.1160 zone, maybe just slightly a few ticks below that, but around there. So this, in a way, this could be that kind of last resort for the buyers, kind of to take advantage of the lower rate and push this one higher. If this, of course, breaks below the pivot, then, well, we will consider slightly lower areas again. Initially, we will aim for this little target around the 1.1144, but if that is not enough, then yep, we will aim eventually for these lows near the 1.1122, where you can see that last week it found good support. It did break below it slightly, but never closed the 4-hour candle below that area. So we are going to be aiming for this target if we see a drop below the pivot, today's pivot, which is around the 1.1158, something like that, and then of course, if it starts falling below the 1.1143 zone. And then, like I said, we will target this 1.1122. And the last pair for this session, very quickly, I wanted to talk about USD-CAD. Now, this one is a bit of a roller coaster, but very, very interesting. So last week I talked a lot about this one, and basically I was telling you guys to keep a close eye on this little range here between the 1.3370 and the 1.35 zone. So now, on Friday, the pair sold off and traveled lower. And but today, this morning, we're seeing now the pair is already trading below the 1.35 level, and of course below this upside support line, this tentative upside support line. So in a way, this creates this kind of slightly negative atmosphere. We may see this one sliding back down here to towards the 1.3480 zone initially, and then maybe testing this 1.3450 level. So for now, keep your eyes on this one. It's a very interesting one, but let's say if this suddenly pushes back above its above the upside support line and the above the 1.3522 level. Now this is where it could become a little bit more exciting again for the bulls, as it could open the path towards the 1.3565 level marked by the high of last week. So, and then of course, if that fails to withhold, this would confirm a forthcoming higher high, and we could target even higher levels. Now looking at today's R2 here, the R2 sits near the 1.3595 approximately there. This could be a nice good potential target, but again, I'll repeat myself, only if we see a reversal, a strong reversal push back above the 1.3522, and then, yep, like I said, we'll target the 1.3565 level. So keep your eyes on this one. Okay, guys, I hope you found it useful. Thank you very much for sticking around and watching it till the end. If you want to join me later on today at my Trader's my Trader's Tea Time, and as always, that's 13:15 GMT time. For now, I hope you have a wonderful day, and I'll see you later. Bye bye.